Hello, everyone. Welcome back to Boss Economic World. I'm your host, here to strip away the jargon, ignore the panic, and tell you what's actually happening to your money. Today is December 17th, 2025. If you've been reading the headlines since April, you'd think the Japanese economy was ready to pack up its sushi knives and go home. Why? Because the orange tornado, President Donald Trump, returned to the White House and slapped baseline tariffs on everything faster than you can say protectionism. The narrative was simple: Trump creates a wall of tariffs, Japan's export-led economy crashes, and we all go back to bartering yen for gold bars. But folks, here is the naked truth: the narrative was wrong. Today, we are dissecting a bombshell report from Japan's finance ministry. Japan's exports to the US didn't just survive the tariffs, they are thriving. They rose for the first time since those duties dropped in April. We are looking at a 6.1% overall jump in exports. So, how did Japan pull off this act of economic Houdini? Is the trade war over, or is it just changing shape? And what does Prime Minister Sanai Takaichi's beef with Beijing have to do with the price of your Toyota? Grab your coffee or your sake, because we are diving deep into the numbers. Let's rewind the tape. In April 2025, President Trump announced baseline tariffs. The markets panicked. The Nikkei wobbled. Everyone screamed, "This is the 1980s all over again." But let's look at the scoreboard released this morning. Exports to the US jumped 8.8% in November. Exports to the EU skyrocketed 19.6%. Overall exports? Up 6.1%. This is the biggest gain since February. Why does this matter? Because for the last 6 months, Japanese companies have been playing a game of wait and see. They held back shipments, fearing that regulations would change overnight. But as Daiwa Securities economist Yutaro Suzuki pointed out today, the impact from US tariffs is largely settled down. What does settled down mean in plain English? It means uncertainty is expensive, but a known tax is just a cost of doing business. Japanese corporations, the masters of efficiency, have calculated the cost of the tariffs, adjusted their supply chains, and realized, hey, the American consumer is still spending money like there's no tomorrow. The drivers of this growth aren't just cars. It's semiconductor parts and medical goods. Think about that combination. Semiconductors. Despite the America First chip push, the US still desperately needs Japanese precision machinery and substrates to build the AI infrastructure that big tech is drooling over in 2025. You can put a tariff on a machine, but if you need that machine to run your data center, you pay the tariff. Medical goods. America is aging. You can't put a tariff on getting old. Demand for high-tech Japanese medical devices is inelastic. The boss takeaway here? Quality beats taxation. If you make the best stuff in the world, the buyer will swallow the tariff. Japan has proven that its high-value manufacturing is sticky enough to stick to the American wallet, regardless of who sits in the Oval Office. Now, let's talk about the crown jewel of Japan Incorporated, the automobile. This is where the story gets fascinatingly complex. Remember mid-September? The Trump administration, in a rare moment of mercy, cut the tariffs on Japanese cars from the scary over 25% bracket down to 15%. The November data shows the immediate result of that cut. Value of car shipments, up 1.5%. Number of cars, up 7.7%. Do you see the discrepancy? If you sell 7.7% more cars, but your revenue only goes up 1.5%, what happened? Discounting. Japanese automakers are sacrificing profit margins to keep their market share. They are eating some of that tariff cost rather than passing it all on to the American consumer. It's a classic strategy: maintain the territory, worry about the profits later. However, there is a glimmer of light. The unit price of Japanese cars shipped to the US has climbed back above the 4 million yen mark for the first time since April. This is significant. It suggests that while they are discounting, they aren't engaging in a fire sale. They are calibrating. They are testing the waters. How much price hike can the American buyer take? The answer seems to be, quite a bit. The trade surplus with the US is now 739.8 billion yen. It's up 11.3% from a year ago. Here is the irony of ironies: Donald Trump was elected on a platform to reduce the trade deficit. He imposed tariffs to close the gap. And what happened? The gap got wider. Why? Because tariffs often raise the value of imports and induce panic buying. Plus, the weak yen makes Japanese goods cheaper in dollars, counteracting the tariffs. The invisible hand of the market is wearing boxing gloves, and it just punched the protectionist theory in the nose. Now, we have to turn our eyes to the West. While the US trade is booming, the situation with China is chilly. Exports to China dropped 2.4% in November. Two things are happening here: the political and the fundamental. 1. The political drama. Prime Minister Sanai Takaichi, often called the Iron Lady of Japan, did something bold in early November. She made comments regarding a hypothetical Taiwan contingency. Beijing, predictably, was not amused. We've seen diplomatic disputes, warnings against travel to Japan, and the usual saber rattling. Some analysts feared a repeat of the 2012 Senkaku/Diaoyu Islands dispute, where Japanese factories were burned and products boycotted. But, and this is key, we aren't seeing a boycott. Why? Because China in 2025 is not China in 2012. 2. The fundamental reality, the drop in exports isn't because Chinese consumers are angrily smashing Japanese products. It's because Chinese consumers aren't buying anything. Data released earlier this week shows China's investment slumping and retail sales expanding at the weakest pace since the COVID crash. The property sector is still dragging the economy down. Japan's exports of chip-making machinery to China? Down. Exports of non-ferrous metals? Down. As our economist friend Mr. Suzuki put it, I don't expect the negative impact of worsening Japan-China relations to appear in trade in a significant way. Exports to China are likely to move more in line with China's economic fundamentals. Translation: China is too busy fixing its own economic leaks to wage a full-scale trade war with Japan right now. The drop in trade is about economics, not nationalism. However, the trade deficit with China is on track to hit a record high. Japan buys cheap goods from China but is selling less high-tech gear to them. This is a structural problem for Tokyo. Takaichi knows she can't decouple from China completely. It's still Japan's biggest trading partner, but the pivot to the US and EU is a deliberate strategy to de-risk the portfolio. So, what does all this mean for your money right now? All eyes are on the Bank of Japan. They are meeting later this week. For months, the BOJ has been itching to hike interest rates again. They want to normalize policy. They want to get away from the zero bound. But they needed a green light. They needed to know that Trump's tariffs wouldn't crash the economy. This report is that green light. The trade balance is in the black. Imports are stable. Exports are resilient. The BOJ can now look at this data and say, the economy is strong enough to handle a rate hike. The uncertainties over the tariff impact have eased. If you are an investor, listen closely, the widely expected interest rate hike is coming. The argument that external risks would force the BOJ to pause has just been dismantled by the finance ministry's data. A rate hike means 1. A stronger yen. This might hurt the exporters slightly next quarter, but it helps reduce the cost of imports for Japanese households. 2. Higher borrowing costs. Japanese zombie companies living on cheap debt are in trouble. 3. Global liquidity. The yen carry trade might unwind a bit more, causing volatility in global markets. Let's pull the camera back and look at the boss economic world full picture. We are witnessing a fascinating evolution of the global economy in late 2025. We were told that globalization was dead. We were told that the world was fragmenting into blocks. The truth is more nuanced. Globalization isn't dying, it's mutating. Japan is the perfect case study. With the US, it's a managed trade relationship. Tariffs exist, but commerce flows because of necessity and quality. The alliance is holding up economically, even if it costs 15% more to cross the border. With China, it's a cooling relationship. Japan is slowly reducing its exposure, not by choice, but because China's growth engine is sputtering. With the EU, it's the backup plan. That 19.6% jump is Japan saying, if the US and China are going to be difficult, we will sell to Europe. The resilience of Japan Incorporated. I have to give credit where credit is due. Japanese corporate strategy is impressive. When Trump announced tariffs in April, Japanese carmakers didn't whine. They calibrated. When China slowed down, they shifted volume to the US and EU. When raw material costs went up, they used the weak yen to cushion the blow. This trade report proves that Japan has successfully navigated the first year of Trump's second term without the catastrophic damage many predicted. The trilemma for 2026, however, don't break out the champagne yet. Japan faces a trilemma moving into 2026. 1. The Trump card. Will Trump get annoyed that the trade deficit is growing and raise tariffs again? 2. The China risk. If Takaichi pushes harder on Taiwan, will Beijing finally snap and weaponize trade, ignoring their own economic weakness? 3. The domestic squeeze. If the BOJ hikes rates to defend the yen, can the domestic economy handle the higher cost of money? So, what is the actionable advice for today? 1. Watch the BOJ this week. If they hike, it's a vote of confidence in the export data. It validates the resilience narrative. 2. Don't panic about the headlines. Trade war sounds scary, but as we saw today, businesses find a way. The goods are still moving. The ships are still sailing. 3. Keep an eye on semiconductor stocks. The 8.8% rise in US exports driven by chips tells you where the money is flowing. The AI boom is shielding this sector from the worst of the protectionist policies. Final thought, the world economy in 2025 is like a high-stakes poker game. Trump is bluffing with tariffs, China is folding on growth, and Japan? Japan is sitting there with a straight face, counting its chips, and somehow managing to stay in the black. The trade imbalance is still there. The political friction is still there. But the data doesn't lie, Japan is faring better than expected. And in this boss economic world, beating expectations is the only metric that matters. I'm the boss. See you after the BOJ meeting.